The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Mortgage rates down a full percent from recent highs. Mortgage rates have been one of the hottest topics in the housing market lately because of their impact on affordability. And if you're someone who's looking to make a move, you've probably been waiting eagerly for rates to come down for that very reason. Well, if the past few weeks are an indication, you may be getting your wish. Mortgage rates trend down in recent weeks is what we've been talking about. There's big news for rates after the latest reports on the economy, inflation, and unemployment rate. The Federal Reserve's recent comments, mortgage rates started dropping a bit. And according to Freddie Mac, they're now at a level we haven't seen since February. To help show the downward trend, check out the graph. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, or if you're watching, any of our socials, Josh has it up there for you. Maybe you're seeing this and wondering if you should ride the wave and see how low they'll go. If that's the case, here's some important perspective. Remember, the record low rates from the pandemic are a thing of the past. If you're holding out hope to see a 3% mortgage rate again, you're waiting for something experts agree won't happen. Greg McBride, chief financial analyst at Bankrate, says, quote, the hopes for lower interest rates need the reality check that lower doesn't mean we're going back to 3% mortgage rates. The best we may be able to hope for over the next year is 5.5% to 6%, unquote. And with the decrease in recent weeks, you've got a big opportunity in front of you now. It may be enough for you to want to jump back in. The relationship between rates and demand, if you wait for mortgage rates to drop further, you might find yourself dealing with more competition as other buyers reignite their home searches too. In the housing market, there's generally a relationship between mortgage rates and buyer demand. Typically, the higher rates are, the lower buyer demand is. But when rates start to come down, things change. Buyers who are on the fence over higher rates will resume their searches. Here's what that means for you. As a recent article from Bankrate says, quote, if you're ready to buy, now might be the time to strike. Home prices have been rising primarily because of a long-standing shortage of homes for sale. That's unlikely to change. And if mortgage rates do fall below 6%, it's possible buyers would enter the market en masse, further pushing up prices and resurrecting bidding wars, unquote. Bottom line, if you've been waiting to make your move, the recent downward trend in mortgage rates may be enough to get you off the sidelines. Rates have hit their lowest point in months, and that gives you the opportunity to jump back in before others do too. If you're ready and able to start the process, give us a call at 800-306-1990, 800-306-1990. We are ready to help you. Remember, if you're thinking of refinancing, we've talked about this one as well. What's your number? What's your number? We've talked about that. Then there's a prior broadcast of Ron Siegel Radio. But what I mean by what's your number is, what is it that you want to save in dollars, not percentages, to restructure or redo your home loan? Now, there's going to be a big, big boom of people coming into the market. And do you want the best rate at the beginning of the down cycle, which is where we are now, or the lowest rate through the down cycle? Well, if you don't know what your number is, how much you want to save, how do you know these things? It's kind of like going to a mall, which I do not do, and saying, well, where is Nordstrom? Well, it doesn't matter if you don't know where you are. How are you going to find it? You got to know where you are, where you want to go, and then we put a plan in place to get you there. That is our whole thought process on this. So that, again, is the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com.